Welcome to Trailblazers. Today I'm here with Ayyan from Onre Finance. Ayyan, can you kind of start by talking about kind of how you kind of became the founder of Onre Finance and like your journey that led you there?
Yeah, absolutely. I guess I can give a brief background myself. Got into space back in 2018, 2019 when I was working on a tokenization platform and helped them scale out their business to about 1 million ARR. After doing that, decided to hop into the world of DeFi. I had like a disagreement with the founders and their views of where we were going. They want to go down more of the legal securitization, broker dealer route, etc. And my view was I started seeing what was happening within Ethereum's community, and this idea of DeFi became very, very appealing towards me. So I decided to hop over into like the Yearn Finance community. Started contributing there quite early on, prior to like really diving into the ecosystem. But that was really my starry-eyed moment, seeing what was possible there. And yeah, like the yield V1 was a bunch of like Ponzi economics, etc. But it really showed the opportunity that you had with permissionless applications and permissionless DeFi itself. And so just kind of stuck around, invested across the space before joining a hedge fund called Visory Capital, and I helped them build out their portfolio from about like 10 million AUM to about 80 million or so. And then from there was thinking about whether or not to continue working within the world of investments or hop back into the world of startups. And that was really where the genesis for my previous startup Gateway came from, which was I think a lot of people forgot like the crypto part of crypto, like the cryptography. And so, like, a really big focus for me was like, okay, what can privacy on chain actually look like? What are the use cases we can enable? And a lot of that actually had to do with kind of the world I'm sitting in today. It's like there are certain requirements that we have to meet in the traditional markets, whether it's like information like KYC, understanding who your counterparties are, not disclosing certain information in regards to the size of deals, etc. Privacy is really important. And I'm happy that we're actually seeing a return on that focus more recently, especially with a lot of these stablecoin chains, as well as like Zcash itself recently performing quite well in the markets. Overall, we what we wound up doing with Gateway that was actually acquired by Circle earlier this year. So I was over at Circle, part of their BD team, which was part of like the whole entire transition for Arc Chains build out, etc. And I was planning on staying there for quite some time before I heard about this little thing called Onre Finance. And so a little bit of a background there is that the team over at Rockaway Capital actually decided to essentially take over this traditional reinsurer. And as part of that sort of takeover, they had asked me to come in and join as like their chief growth officer and one of the co-founders to really lead the growth of the business. And I thought the opportunity made a lot of sense because given where my background in crypto, as well as with while working at Circle for a couple months, the thought process for me was, where do stablecoins go next? And I think that stablecoins in form of payments is just one use case, but the real unlock happens when it comes to global traditional financial markets. And that is where I was most interested in bridging that gap essentially between traditional finance and decentralized finance. So I'm happy to kind of walk through the vision of Henri, what we've been able to accomplish so far. But yeah, that's a bit of background about me.
Yeah, that's awesome. You've kind of been in the space for a long time, like leading to coming here. Yeah, can you start off by like just breaking down kind of what Onre is and like what people should know about you guys?
And I think like the way that we should start here is like providing an overview of like what is it that we're doing, like what is it the industry, right? We've seen tokenized treasury bills, we've seen like the Benjis, we've seen the Biddle funds, etc. So I want people to come into this sort of appreciation for Henri from the same perspective of what those markets did. They didn't really change the way that treasuries work, etc. They just enabled people to have global participation, liquidity, etc. when it comes to those traditional offerings. We're doing the same thing with reinsurance because reinsurance is a close to $1 trillion industry. And much of the way that it works is that it's attractive because the financial returns from the market are quite high. They're driven by insurance premiums and risks. And so typically this asset offering is only available to the top 1%. Think like Goldman Sachs, like wealth management sort of clients. You're talking about pensions, you're talking about hedge funds, you're talking about asset managers. These are the people that have historically allocated to reinsurance. And these investors typically have 10-year time horizons. Now, all of a sudden, what we want to do at Henri is essentially democratize access to this asset class with digital market or digital assets. and specifically our offering, which is OnYC, which is the on-chain yield coin. I think the barriers to entry for these types of traditional markets, these private credit opportunities, private placements, etc., have been so high in the past that by utilizing the infrastructure that crypto has provided, you can enable a global pool of capital to participate, provide greater liquidity for historically illiquid assets. And most importantly, the thing that really gets me excited is the idea of using something like OnYC, which is tracking the economic interest of our reinsurance pool, the ability to actually utilize that and get additional yield. So compounding that yield that we're currently having from OnYC into lending markets like Camino or LoopScale, running looping strategies on top of that. My goal for OnYC is that we want to see that become the go-to collateral asset for the world of DeFi, and us as Onre becomes the leading on-chain asset manager that's using these sorts of stable coins and yield-bearing assets to underwrite real-world reinsurance.
Very cool. So probably a lot of people in the audience don't know exactly like how reinsurance works, where the yields come from. Can you kind of break down for somebody who doesn't have a complete understanding of that about what reinsurance is and kind of how it works?
Yeah, 100%. Honestly, I was like many of the people that are probably like looking to on-read just a few months ago. Reinsurance wasn't really a market that I understood. The piece I understood is the globalization that digital assets and crypto can enable. So the real appeal for me here is that Onre itself is a licensed reinsurer that operates out of Bermuda. So they are regulated by the Bermuda Monetary Association or Authority, and the team itself has over 30 plus years of underwriting and risk selection experience. So Tunde is a chief underwriting officer. He's someone that has written reinsurance across multiple different companies. Historically, his loss ratio, which if you for a better lack of a better term means like P&L, he has historically performed at like 40 to 50%. So he has tons of experience in that space and building out like a quality reinsurance book. The way that it works is that we typically take these stable coins, right? The ones that you're depositing in order to get on YC. Same sort of flow to like, I would say syrup USDC. User deposits USDC, receives syrup USDC. Maple takes the USDC that has been deposited and lends it out to institutions. In our case, what we're doing is we're taking that USDC you deposit and allocating it towards underwriting reinsurance deals. So typically our portfolio is split up between property and specialty insurance. One of them is fully collateralized. The other side, a little bit more flexibility in terms of the types of premiums or size that you can underwrite with. But the whole entire goal for us is to be able to leverage the premiums that we generate from there, bring it back towards a reinsurance pool. From an accounting perspective, what we do is we track the net asset value of the reinsurance pool, and that value accrues back to OnYC. So we're essentially tracking the performance of our reinsurer, and then the users are essentially receiving the yield based off the performance of us. So you're entrusting Onre, and I think this is the simplest way to look at it, as an on-chain asset manager.
Okay, totally makes sense. And like, so this is like a massive market. How do you kind of, so there's different kinds of yields and they're like, some are kind of generated from treasuries, some are generated from like speculation and DeFi. Like, how do you see the yield generated from reinsurance, like its correlation with these other kind of sorts of yield?
Yeah, it's interesting. I think that's what makes OnYC unique, is because we're essentially taking those, let's say, tokenized treasuries and using them as collateral. So anyone that's holding OnYC can expect that they are also going to get that 4% um, uh, yield. But on top of that, you're looking for 8 to 12% on top from the reinsurance premiums. The view that I have here is that the reason that this yield is more interesting than maybe some of the other more crypto native opportunities that exist out there is that, one, we're not dependent upon the interest rate or the global sort of perception of what like the interest rate needs to be in a market. Two, we're not dependent upon crypto market volatility, right? So whether or not you're a believer in 4 year cycles, whether or not you're a believer in like the next hot thing where people are going to focus their capital attention towards, we are not affected by that, right? And in fact, like I like to joke around with investors when we talk to them, is that we're the perfect bear market asset, in the sense that when the markets are turning down, we will continue to perform as well if we were in the bull or in the bear, right? Our business model, our underwriting process, our strategy does not change. We're going to continue to use the expertise that we've leveraged for decades across this team.
Okay. Yeah, that makes sense. And like a lot of these yields are very correlated. So although they're like super high on Camino or super high on maybe a perps market to do some funding rate arbitrage, in the end, it's kind of coming from the same source. So that's really cool that you guys are kind of pulling something kind of different into it.
Yeah, our goal here really is uncorrelated returns. All right, I think that if we want the market to mature, and you want to be able to bridge traditional finance into decentralized finance, there needs to be an asset or an industry that those capital allocators really understand. I think that there is only a sliver of the private markets that can probably appreciate something like a hyperliquid. But I think that there is a larger percentage of the private markets that can appreciate tokenized treasuries, tokenized real estate offerings, tokenized credit opportunities, etc. That's why you see most of the larger funds that are moving into space go down those offerings or routes first.
Yeah, it totally makes sense. So how do you guys kind of think about like growing the supply of your stablecoin and kind of getting more adoption in that? Like, what's your kind of game plan and how do you guys think about that?
Yeah, 100%. And I think just to be clear, like we aren't a stable coin. I think we're more of a yield bearing dollar asset, right? Where the assets that we're utilizing to collateralize the reinsurance are treasuries and dollars essentially themselves in the form of like USDC, USYC, USDG, and a bunch of other products in the space. What we are going to do for growth, if you will, I think that there's a lot to learn from the industry, but most notably, I think you need to unlock utility for users across all the venues where yield is being utilized. And what I mean by that is like you have two opportunities here for growth. And I think that you can see which projects are doing what, but you either A, do like these sort of like infinite LP incentives, private under the table deals to be able to get as much TVL in as possible. You boost up attention, you get a lot of marketing that way. You know, you go overnight from like $10 million in AUM to over like 300 million in AUM, and everyone's talking about you. Or you take the more organic approach, which I think actually aligns with the sort of approach that we need to be a business that exists for more than like 2 years. Like I don't want us to be one of those offerings that just everyone talks about for 2 months and disappears after a year later. Like we're here to build a 5 to 10 year business because that's how the timeline for reinsurance industry works, right? So main focus for me when I first joined Onre was okay, we want to essentially make sure that we're incorporating as many different potential stablecoin to yield bearing assets as collateral to then feature everywhere we can where yield is important. So first place that we listed was Camino. I think on Camino we have over $14 million or so deposit across the Onre markets. So that shows you how much interest there is for people to participate on that. And I think we wind up becoming like the second largest market just behind like Syrup USDC when it comes to RWAs or tokenized assets, etc. So that to me is like a pretty big sign for like where we're heading. Second was LoopScale. I think LoopScale is really intriguing. I think that if you haven't already, or if people haven't, definitely go and speak to Luke and Mary. I think that there was a lot of FUD early on, given the push that they had early and the hack that happened. But the team has recovered so tremendously, and I think they really understand the product and they really enjoy what they're building. And so we wanted to feature there because I think the unlock is providing a simple way for people to really gain utility on yield compounding. So what I mean by that is right now, for example, the idea with OnYC is if you hold it, you can make like a 12% APY. But with looping, being able to actually go and deposit that asset and then borrow and increase your exposure via leverage, you can go and compound your yield. So now all of a sudden you're going from 12% to now 20 to 35%. And I think this is really interesting for a lot of like, let's say more degenerate yield farmers who are interested in this because OnYC is going to be collateralized, going to be deploying that capital, and as that asset or the underlying collateral asset continues to appreciate in value, you feel comfortable knowing that your yield will continue to grow and grow. So I think it's a natural venue for us to feature on, and then of course Exponent. I think that Pendle, Success, and other sorts of venues have shown that people have a high interest for yield trading. So the playbook for us is really just continuing to increase integrations for OnYC across the main places where people are interacting with crypto today.
Yeah, that makes sense. And like, do you think that these venues are really the main value add of kind of tokenizing a yield source that you guys in the way you guys are doing it?
I think that the main unlock really was the way that we structured OnYC itself, which allows for people to actually participate in, let's say, the economic interest of the reinsurance industry. Because if you look at like the way that Securitize and other sort of projects have done it, is that it's on chain but it's in a black box. So the liquidity, the amount of activity, the amount of holdings is like very, very low. People get excited because it's a great name, and it's a great offering that people get to see, but in reality it's something that people can't interact with. So one of the main things that we really focused on as a team was, okay, how do we structure OnYC and the products to obtain OnYC to be able to ensure it becomes exactly what we want it to be, which is a global accessible asset for the purpose of collateralizing across the world of DeFi.
Okay, yeah, that totally makes sense. And yeah, I don't know. I look at a lot of the on-chain data for a lot of these different protocols, and you see like 15 holders and zero transactions, and it's like, I don't know, it kind of disappoints me in a little bit, even though they have massive TVLs.
100%, and I think that's like the piece too. Like if you talk about the fear that I have with a lot of these newer yield bearing assets, is that you have such large supply being held by the large TVL providers or the people that you provide significant incentives towards, that you wind up creating a potential liquidity risk for yourselves. Because in the case that they want to go and redeem, or they want to go and move their capital out because of the market situation, that can lead to significant downturns in secondary markets and pricing. So I think that you would rather focus on a more modest growth approach and driven by product, because that's more organic AUM coming in, rather than trying to go for the Hail Mary all at once in a month or two and then trying to play like the token launch game afterwards.
Yeah, yeah. No, I definitely like that method. And so, how does the redemptions work on these tokens? Is there any like lock for redemptions, or can people kind of redeem them out for like the net asset value at any time?
Yeah, so there's two sides to it, right? And I think this has like been a big piece of like what we want to focus on is enabling actually strong secondary market liquidity. So currently, I think across Orca and Radium, you can see like 10 million in secondary market liquidity, which I think should be sufficient for most people who are holding decent amounts of OnYC to be able to move in and out of their positions as they please. But there is also a redemption put into place for KYC and institutional investors that go through our AML process. Redemptions currently happen on a quarterly basis, currently crafting a plan to be able to allow that to occur more frequently, with the goal for that to actually be more liquid by January and February. So essentially pushing towards a process where people will be able to um, redeem on the go, if you will. I can't provide like specifics around timelines or like the mechanisms that we're thinking about, because I don't want to make any promises. But I think that that will allow us to actually obtain more growth. I do understand that there is concerns from investors whenever it comes down to redemptions and periods to be able to move their capital. But that's why my counter to that right now is get as much utility as possible, get featured into Onre, unlock the highest yield in Solana, become the place where people are being offered like stable institutional grade DeFi yields, and now giving investors the opportunity to actually like collateralize that. So what we miss out with liquidity, we can make up for in utility in the short term, and then move towards a long term solution.
Totally makes sense. So like I don't know, I've talked to some different protocols that kind of are doing these like yield bearing like dollar based assets, and some of the problems they have is like finding yield. But given like the market's so big, where do you kind of see like the bottleneck on kind of what you guys are doing? Do you think like say tomorrow there was like $1 billion in demand for ONYC? Do you think you guys could maintain like the yield rates that you have, or like I don't know, could you break that down a little bit?
No, that's a very fair question, and I'd be lying to you if I said like, hey, we would be able to maintain yield rates. I think we would be able to over like a given period of time, but immediately no. Like you're getting $1 billion of capital inflows. Now all of a sudden the yield, yes, would respectively drop if we were being very honest and realistic. But that $1 billion also helps us become much more of a accepted regulated entity in Bermuda for operating reinsurance. Right now, all of a sudden, we can go and get better quality licensing. We can get better quality ratings from AM Best and these other sorts of institutions that exist. And so, what we see as being a short term issue, which is a good problem to have, you have so much capital coming in, allowing for us to build the better infrastructure for a business that's going to exist 5 to 10 years down the road. And now all of a sudden, with all those pieces into place, whether it's the ratings, whether it's the relationship with larger brokers, because you have a larger capital base built out, you can go ahead and start writing deals that can generate significantly more returns. So right now we're talking about 12 to 18%, but think about a world in which we're able to generate double that. So this is why all this infrastructure over time is important.
But you think like the market itself, like not that like immediately tomorrow, like the yields would drop, but like say in a year and you could structure out the deals, you could kind of, the reinsurance market is like sizable where.
100%. Yeah, I think the really interesting thing is that our revenue dynamics at Onre, we generate the same amount of income on $10 million worth of AUM as a $500 million money market fund. Right. And so even the APY that we currently push to the market today is based off of the fact that we have certain fees that we have to pay out to brokers, costs that are associated with running the business without having the proper, let's say, ratings that we need once we grow out the business. That all goes away when you have the capital come in. So I think in a year down the line, we would be one of the most cash flow heavy businesses that exists within crypto. And then two, we would also be able to actually build out the reputation within a space where we're consistently meeting liquidity requests and returning to investors the targeted APY.
Okay, very cool. So it's like right now, since there's like a limited size, it's like there's overhead that involve the yield, but as the overhead kind of becomes negligible, the yield kind of could shoot up.
That's correct, right?
Uh,
There's always growing pains associated with a startup. So like once we get past an inflow of capital solves all of our diseases, right? That's just the world of business that we live in. It's a capital intensive business. So if we have the capital, we solve it.
Very cool. So what sort of things are kind of on the horizon for you guys? What sort of things are you guys kind of excited about going forward?
Yeah, I think obviously I'm biased since I'm leading growth here, but it's like I continue to want to see OnYC be the go-to collateral asset of DeFi. Like for example, since the start of August, we've seen over 80% plus in our AUM grow since we started the DeFi strategies. We've also had a new product going live, which we're officially going to market. I don't know when this goes live tomorrow, so on October 1st, we'll be bringing to market the Onre permissionless flow, which we're calling the global access. So now people can be able to actually acquire OnYC directly at NAV without having to go through the KYC/AML process, etc. So that I think is a huge unlock for the industry, for the market to be able to directly interact with OnYC. Two, we have our points program already live. And so with the points program live currently, our focus is really to target utility and areas where people can perceive the net most benefit for Onre, whether it's actually getting yield on OnYC or stabilizing the Onre market itself. So I think it's both sides, especially when it comes to a yield bearing dollar asset. And yeah, we also have a lot of thoughts around expansion. I think if you are talking about us really going to market in Solana, there are still a couple of venues that I'd like to see Onre featured. I think platforms like Drift, OnYC provides a pretty unique collateral asset where people can essentially entrust that their yield or the value of the collateral asset will continue to grow, which could have unique, consequences across the perps trading platform, right? So you in theory you should see your liquidity or liquidation prices increase as Onre continues to stabilize and grow in yield. Things like I want to see more, let's say, partnerships with top Solana trading pairs. I'm hoping at some point we probably team up with the Jito guys. Seeing Jito Soul plus OnYC, you have the institutional LST plus the institutional yield bearing dollar asset. I think that sort of writing is on the wall, and it's like an interesting pair. Considering you could probably run a low leverage long on Solana if you really believe on it by looping those two assets together. So that's really my focus. Like I do think that we have some really, really interesting plans put into place to grow Onre over the next 2 to 3 months. And then long term we'll think about expansion, etc., into other ecosystems as well.
Yeah, damn, that's a lot of stuff. So from what I understand, like some of the reasons that the redemptions are the way they are is for like regulatory reasons. How are you guys able to do these like permissionless redemptions?
Yeah, so the redemptions are not going to be permissionless. So I will be clear. Redemptions essentially being able to go and redeem directly from the actual reinsurance pool requires KYC. So that's why we have the secondary markets built up, where that essentially is your way to be able to move out of OnYC permissionlessly. So when you're looking at the liquidity in the markets, if you want to, I don't know why you would want to go and sell your OnYC. You can go do so on Orca or Radium. But in theory, if you wanted to redeem capital directly from us at NAV, you could do that by waiting for the quarterly redemption period, which starts tomorrow, remains open until the end of October. And then from there, we'll be able to pay out the requests for those who have KYC and gone through the qualified investors flow. So yeah, that's how redemptions work initially.
That totally makes sense. So maybe taking a little bit broader view on the crypto market, other than like what you're directly working at Onre, like what other things kind of have you excited right now?
One of the things that have me excited right now, I think that this cycle has been interesting, right? And I think everyone's been talking about this. I think we've gone to the point now where applications and control over distribution becomes more important. And this was part of the reason why I moved to Henri, because our sort of growth risk is more in our control, meaning that like we're directly interacting with our counterparties and placing deals. So I think more offerings like this will retain success over the long term. I think that even something like Hyperliquid it has been really interesting because of the fact that it has direct interactions with its ideal consumer, which are like traders, etc. And it solved a massive issue, which was liquidity. I think like the liquidity that you see on Hyperliquid is significant, and that's why it's been as successful as it has. The perp meta right now is pretty hilarious. But I think that it's just a sign of like where things are moving, and I think people are realizing that permissionless access to these types of markets have their benefits. Plasma has been really interesting. I think that there's a lot there in terms of like the neo banking infrastructure becoming a unique place for actually unlocking tether DeFi. Like I think that USDT historically has only been used for payments, but I think the real unlock is like actually enabling tether users to get access to quality yield offerings and opportunities to actually grow their holdings. So I think that the idea of what Plasma is doing and what its ecosystem is doing is very interesting. And then third, I think Solana. Like, there's a reason why we chose it as our home. I think that naturally it is the best generalized L1 infrastructure put into place today. I think the infrastructure is so good that it allows for the types of issues, if you will, that we've seen. It's so good that it allows for these meme markets or these bad actors to come into place. Kind of reminds me of the early internet, right? Like when the early internet existed, it was so effective that allowed for people to do the illicit activities that they did. I do think that the markets are maturing. I think Solana's focus on capital markets, especially, has been a strong push. And I think also focusing on products where you have direct relationship, like Pump, whether or not we like it, is a sign that we're moving towards like product first approach, which I think is scalable for the business long.
Awesome. I think this is a great way to wrap things up. Thank you for coming on and sharing what you're working on and kind of your thoughts on the industry.
No, I appreciate you for having us, Jack. And yeah, we're very excited about being able to bring real world yield into DeFi, making it fully composable and unlocking what I call like the historically most illiquid asset class in all of traditional finance. So this will be fun ride to do together.